tell us a bit more about what is going to be more important. Has everything pretty much been priced in when it comes to getting some type of a positive outcome?
Well, that's a very good question. I mean, you only have to go back to last year and see how big an impact the nuclear tests, the missile tests had on $1. So I think we've got to a point now where the market is a lot more comfortable with the geopolitical situation. So you could still see another leg lower in dollar Korea, so strengthening won in the short term if we do see some positive announcement. But the market's very much going to want to see the details, in the sense that, you know, how do we kind of get to complete denuclearization? That type of scenario is what the market is really going to kind of be looking for the details on.
Yeah.
So, and I think the longer term investors will probably adopt more of a wait and see approach. Particularly, as I said, we've seen a lot of that risk premium come out of the one outlook over the past kind of 6 months or so.
That peace dividend, I guess everyone has been talking about.
Exactly.
Yeah, of course, if we were talking about what is going on with dollar, I mean, we've seen this G7 fallout here, where President Trump basically is accusing Justin Trudeau of lying when it comes to, you know, reaching some type of consensus when it comes to free trade. Are you focusing more on the G10 space here this week, given the fact that we have so many of these central bank meetings going on this week, more so than the EM side? Yeah,
I mean, I think that's a fair observation. I mean, I think the Fed outlook will be quite important. I mean, you know, you look at the last few unemployment prints, they've been quite strong, so we continue to see this movement down in the unemployment rate. You know, are we going to see a emergence of the Phillips curve relationship? So, i.e., as the unemployment rate comes down and wages growth finally going to start picking up? So that's one issue, and how the Fed kind of deals with that. But we're not expecting any huge changes. And then obviously you have the ECB as well. So we think the ECB wants to move towards a process of policy normalisation, but at the same time, the European data momentum has been quite weak. So how
can
they
dollar resume the rally then?
That's definitely a short-term risk, that we think that the dollar is still going to be on a fairly reasonable footing, but the longer-term outlook we think is still to the downside for the dollar from the twin deficits perspective.
Jonathan, before we get into more of the meat around the central banks, we'll do that shortly. I want to just follow up on what you said about the G7 fallout, because it wasn't just Mr. Navarro. We had Mr. Kudlow weigh in, and the rhetoric is sharper than it usually is. Take a listen.
He really kind of stabbed us in the back. He really actually, you know what? He did a great disservice to the whole G7. He betrayed...
Trudeau did.
Yes, he did, because they were united in the G7. They came together.
The columnists at Bloomberg View, they put out an editorial and they write, quote, North Korea presents an extraordinarily difficult challenge. Progress this week is possible, but Trump should resolve at least not to make the situation any worse. Do you see that risk as well, given what happened at the G7 just in the last 48 hours?
Yeah, well, I mean, that's certainly an issue that the market needs to be aware of, because as we were discussing earlier, the general tone has been one towards heading towards a more positive resolution around the whole Korean Peninsula issue. So obviously, if you see a bad outcome at this week's summit, then some of that risk premium that has been priced out of Korean assets could start to quickly get priced back in. So we could see outflows from Korean equities, and dollar won would naturally be pressuring higher on that basis.
How do you expect the Chinese to play a role in all of this? We put a chart together that shows the kind of trade relations that have remained very strong between the two. Is there a certain trade that you would recommend to clients around this theme, other than the ones that we've already discussed? Is there any contrarian view, perhaps, that you see a lot of upside in?
Well, I don't think there's a huge kind of big contrarian trade at the moment. I think China's going to be adopting very much a wait-and-see approach to see how the summit, very much unfolds. So, as I said, I don't see a big contrarian trade at this stage.
What are you taking when it comes to EM? I mean, we've seen the likes of Indonesia, India raise rates here, pretty much forced to the corner to do so just to stem the bleeding out of these currencies, but they've already kind of resumed losses so much. So do you think that is enough for all these central banks to try to stem the currencies when the dollar is getting a little bit more of a stronger footing now?
Well, we would suspect that there's still more work to do from some of these central banks. I would say that India and Indonesia, in a relative sense, are in a better place than some of the other central banks in the emerging market space. So we're not going to see the same types of moves that we saw in Argentina or Turkey. They're clearly in a better position now than what they were in 2013 during the taper tantrum. But that's not to say that they can be complacent. So we still probably see more rate hikes from both Reserve Bank of India and Bank Indonesia through the course of 2018 in order to keep financial stability, currency stability very much at the forefront of the markets.